What's up, Zingers? Welcome back to another earnings report coverage. I'm your host, Kevin Dubriske. With me is the one and only Paul Meeks, and we're going to be covering Nvidia's Q1 earnings. Now, they just reported, seems like they missed on their EPS, but they beat on revenue. So we're going to dive into it, look at the stock, look at the company, and look at their roadmap. So Nvidia Q1 earnings report came in. Paul, what happened? What did we get?
Yeah, so one thing folks should know is that the company announced several weeks ago that because they were prohibited by the Trump administration of shipping H20 chips to China, that they were going to take a $5.5 billion inventory charge. So that's going to impact earnings. And also, it's obviously, if you can't ship the product anymore, it's going to impact sales, not in the quarter just ended, but at least for a couple more. And so when you see the consensus estimates, wherever you get your consensus estimates, there is some controversy about that. But I would say on an operating basis, it looks like, and that is excluding that inventory charge, it looks like on a non-GAAP operating basis, they may have reported as much as 96 cents a share, which would be slightly more than the like estimate. But again, you're going to have a consensus that might be skewed depending on the service that you look at based on that pre-charge that they announced a few weeks ago. On the revenue side of the house, I thought that they looked solid, and they are guiding to a little bit slower growth in the next quarter than some people were expecting. But the reason that the stock is still trading up a couple bucks after hours on this report is I think even though the revenue guide might be slightly light on paper, some people were worried about a much worse scenario. And so it's kind of like, oh, it's better than the worst case.
Right.
Maybe not better than the original case, but better than the revised worst case. So overall, that's the only blemish, that sequential guide for revenue. But again, I think it's fairly solid. Now, of course, I'll be on the call at 5 o'clock and I'll report back, but I want to hear all the details.
Awesome. So quick little interview into Nvidia, guys, as a company. How does Nvidia make their money, right? They have their data centers, that's their AI chips, enterprise GPUs, cloud partnerships, that's their largest segment where they make most of their income, their revenue. Gaming, this is a huge portion of their revenue too. They used to be mainly a gaming company, right? GPUs, computers, gaming PCs, they were very heavily in that gaming sphere. In fact, Paul, I was curious, do you think gaming still has that big of an impact on Nvidia? Or are we sort of past that and it's more AI now?
Yeah, it's definitely driven by the GPUs that are in AI data centers. They still have a robust gaming business, but the reason that the stock has traded so well the last couple of years, the reason that it trades at the multiple that it does in a bull market, is based on the fact that they probably control worldwide about 80% of the AI GPU market.
Wow, I was going to ask if you thought Nvidia could hold up on its large lead against the rest of the AI chip manufacturers, but holding 80%, I
Yeah.
think they're looking pretty strong.
Well, AMD looks like they'll be a very viable number two, but my read on the situation is AMD right now is about 12 to 18 months behind NVIDIA on their manufacturing technology. So over time, I imagine that gap will close a bit, but NVIDIA will always be the big fish, and AMD will probably do pretty well just swimming in its wake.
Sounds good. So if AMD's so far behind, why can't they catch up to where Nvidia is technology and AI wise? Why would they take that 8 to 12 months, or like you said, that long tenure, that long backing, that they haven't caught up? They're not neck and neck with them, even though that they're sort of the second best to Nvidia.
I think NVIDIA made a very terrific call, a very bold call years ago, right? To start using these GPUs that were, typically, as you said, used for gamers. They essentially created this market.
Right.
And the thing that people don't realize about NVIDIA and AI is not only do they have the best chips, the most powerful, the best all around chips, but they also have an ecosystem of software and connecting data networking and relationships with all the key people. And so their ecosystem is kind of like Apple, right? When Apple's glory days, right? You had the phone, so you had to have the iOS and you had to have the earbuds, and everybody was paying you a toll to put their apps on the phone. Nvidia and AI has that kind of ecosystem. It goes beyond just the chips.
Wow, that's something. So that sort of leads us into the product roadmap and innovations. Paul, if anything here catches your eye, I know they have their Hopper and their Blackwell, their high performance GPUs. What are your thoughts on these? I know they also had, I think it's on the next slide, about their $40 billion deal. The following one after that, we got a lot going on with Nvidia, everybody. But let's stick with their Hopper and their Blackwell.
So one of the issues, and I think it might be part of the reason that the revenue guide sequentially is a little bit less than people might have expected, is they are transitioning to the Blackwell chip. And when you transition to a new chip, even if you're a marvelous executor, as these guys are, there's always going to be trials and tribulations, right? When you're leading the pack, right, there is nobody else to follow. And so I expect to have a little bit of turbulence. We originally thought before all these Trump announcements that the turbulence was going to be absorbed in the quarter that they announced today. And then we get back to reaccelerating revenue growth. It looks like the transition is going to take a little bit longer than expected. But going from one chip platform to another one is a huge, huge task.
Yeah, no, absolutely. Do you think, now you mentioned how NVIDIA is sort of resembling Apple in the sense that they're no longer just chips, they're no longer just GPUs. Where do you think is some of their strongest suits?
Well, one of the things you have here, which is really important, is the CUDA software ecosystem.
Yep.
So think about it. If you have the software ecosystem and that connects everything and everybody, partners and customers. And now, we're going from not only AI being developed by the 4 major hyperscalers, but they just got back from the Middle East where they're selling a bunch of chips directly to the Saudis and to Qatar. And now they're pursuing sovereign AI, where countries are spending tons of money on building a national AI capability, even beyond the private market, where you have obviously Google and Microsoft and Meta and Amazon.
Wow, that's something. That is a game changer right there.
Yeah.
So some risk factors to watch out for. China export restrictions, right? I know they have to now create a new GPU that they could export to China. Again, this is also going to have a huge impact on their revenue.
Yeah. Yeah, the interesting thing here is, so the only thing we know right now is they can't ship the H20s. So they've already taken the inventory hit, and they'll probably lead to a pretty big hole that they have to fill with other revenue to keep their overall revenue growing. So we'll see. But I think what happens is the Trump administration and the Chinese are, hopefully, for the sake of all of us, are negotiating a tariff deal. I think they're not only talking about tariffs. I think they're going to end up doing a deal that's going to be broader, which is going to include some guidance on just what you're talking about. I'm hoping the deal with the Chinese gets NVIDIA access to the Chinese market again. I know it's going to be part of the tariffs. When will we hear? Who knows?
Yeah, no, that's a great point. There's restriction on these GPUs to China. If we come across some type of tariff deal, that might lift those restrictions.
Yeah. Yeah, the tariff is one thing. The export restrictions are something else entirely. But I think in this particular negotiation, they're going to try to do a twofer.
Yeah, no, sounds like art of the deal.
Yeah.
All right, let's see. We also have, NVIDIA Corp portfolio. NVIDIA guys, they're not just a strong company. They have a very large stock portfolio. They hold CoreWeave, CRWV. That's 78% of their portfolio, 24 million shares. ARM Holdings, ARM, 1.1 million shares, 10% of their portfolio. APLD is one that they added a bit more recently. That is Applied Digital Corporation, and that is 7.7 million shares. And here's some other holdings as well. RXRX, NBIS, and WRD.
The CoreWeave is particularly interesting because CoreWeave was a company that only IPO'd at the end of March.
I
And
saw that.
we're at the end of May now, so it's only been 2 months. But the IPO was at $40 a share, and because Nvidia became a shareholder when it was private, you could assume that their cost basis is much less than that. But even the IPO 2 months ago, 40 goes to today. I think it closed at 116 in 2 months.
Yeah.
And so, they're a 7% shareholder of CoreWeave, and so yeah, they made a billion or so right there.
Wow. That's insane. Talk about not just AI chips anymore. They're a whole brokerage. They're a whole prop firm. So industry buzz and expectations, guys, some things to look out for. This is what I was talking about early, the early Blackwell shipments by Dell. Thousands of GPUs a week may boost margins in Q2 guidance. Paul, did you have anything to say about this? Their Blackwell, the shipments with Dell, they're
Well, this will be interesting because I believe Dell reports tomorrow after the close, and they will give us a pretty good sense as to not just how many servers they're selling, but how many AI data center specific servers they're selling. And so that'll be very important guidance because these two companies are, I don't want to necessarily say they're closely tied at the hip, but they're definitely positively correlated.
Yeah, that's great. Something to really keep an eye on, guys. Remember, if you're looking at Nvidia, you're invested in it, whether it's stocks, options, but long term you're looking to hold, make sure you know what's going on within the company as well, whether it's products, roadmap, companies they're invested in, companies that they're partnered with. This is all important information that we have to be aware of. So what to listen for on the call? And then, Paul, I know you got to get going. So
Yeah. But on this stuff, what I'm interested in, we know the EPS, right? We got the guide. We know the revenue. We've got the guide. We said that everything looks kosher except for maybe a little bit weaker revenue going from the April to the July quarter. But you know what I'm very interested in? What is the guidance for gross margin? Because 2 quarters ago, their gross margin was 75.0%. It dropped by 1.5% last quarter. And I want to see what the print is here. But what happens when you're ramping a new chip like Blackwell, it's going to hurt your gross margin. We were hoping that the gross margin trough would have been the quarter that they announced tonight. My sense is with this revenue guidance that the gross margin has not troughed yet, that we still may have some weakness in the next quarter. Again, their original guidance on gross margin came well before all these Trump administration announcements.
wow, guys, a lot to consider. Guys, this earnings call is going to be at 5 p.m. Eastern. Paul, thank you so much for your time and your analysis on everything NVIDIA-wise. Always appreciate you.
And tune in right here, Tech Tune Up with Paul Meeks every Tuesday, 11:30 a.m. Eastern Time.
The best.
All right, guys, be well.
The one and only Paul, guys. Make sure you hit that like button. Show Paul some love. Appreciate him and all the knowledge he brings in. And don't forget to tune in for Tech Tune Up here on Benzinga on Tuesdays with Paul. Paul, thank you so much. Take care. Now, guys, let's get into I do have some analysis we're going to go over for NVIDIA. We could also cover the stock portfolio of NVIDIA itself, CRWV, ARM, APLD, and more. So let's pull up our chart and let's get some analysis going. So here we have NVIDIA, and right away, guys, look at this. This is where we closed. This is where we're trading. So we had a positive reaction to our earnings, but we haven't had the call yet. And that earnings call is super important because it's going to help give us some guidance going forward. So what happens, guys? We closed at 134. We're currently up about 4% on NVIDIA after hours. If they come on and they aren't that confident on the call, or they might see some type of issue, like Paul mentioned, that 5 billion hit due to the China situation, well, guess what? This big gap up could end up pushing back lower. For anybody that's in any type of stock or option on NVIDIA right now, as you know, you can't exit options when the markets are closed. So right now, just because we gapped up, if you're in any puts or anything, that doesn't matter. We don't know if we're going to open here tomorrow. The market could also correct itself and come right back there. Absolutely, guys. My revenge trades fail 75% of the time. Can't be a revenge trader. Just got to listen to our analysis. So, guys, again, looking at the daily time frame here on NVIDIA, and it's been just a huge, great buying advantage right when we were below this 100 price level. And this is just recently in early April. Since then, we have been able to rally up from there about 39, almost 40%, not even off of those lows. So Nvidia is looking pretty good. Like, it does want to make its way to all-time highs. It has all-time highs of, let's mark it out. We have 153.13. So right now, pre-market, we see we're currently trading at 140. So if we took our measurement tool, we measured that out real quick, we see that we are about, at least at this point, we're only about 8% away from all-time highs on Nvidia. Just like a bunch of other large cap major tech stocks, Microsoft is also only about 3 or 4% away. A lot of equities in large cap tech has been doing phenomenal this earnings season. Now let's take a quick dive into CRWV, and that's one of the top holdings. That is the 78% of its portfolio is in this stock right here. And look at this. This is when they IPO'd, just like Paul mentioned. This is late March. Since they IPO'd at $39 a share, they are currently trading at $119, guys. Now, like Paul mentioned, because they were early investors, they could have had a much better entry price, right? They don't have to have the stock price. They could have had the option to buy at a lesser price, lesser value, and given them a much better return on investment. Truly is a wild thing to see a stock perform this well, and it wasn't like it was under the radar. Nvidia has to announce and fill out that Form 13F every quarter, every calendar quarter, fiscal quarter, right? Now, the issue with the 13F filing is they could fill it out up to 45 days after each quarter, just like Michael Burry, the Big Short. He recently released that he was all short. He was only long in one stock, EL, but that wasn't the case at all. So we have to be aware of that. ARM is another big holding by Nvidia. That is a stock that's been around for quite some time. And we see that Nvidia, we have the highs and lows of ARM. We have $90 to $100 is a good buy area. We have all-time highs around 180 to 190. Again, a good place to buy around the hundreds, sell the highs, buy the lows. We want to trade the range when it comes to markets, everybody. Now let's take a quick look at Nvidia one more time just to see how we're performing after hours. And guys, let me know in the comments if you think we're going to get a strong earnings call and we're going to be bullish, or do you think that there's going to be some skepticism and there's worry about the whole China situation? Because right now we don't have any confirmation. We don't have a clear-cut answer, and there is no tariff deal set in stone right now. All the current deals we have are all temporary. So with that being said, can markets really move higher on temporary deals? Absolutely not. So we want to be careful. We want to watch and make sure whatever you guys are investing, if you're investing, you have to be okay with losing. Don't want to say all of it, but you have to be okay with losing a good chunk of it if you're investing it, guys. So you have to be careful. Investing is a very tough game, and do your analysis correctly and be patient. We never want to try to jump the gun in anything. Really crazy seeing Nvidia push above 140. I'm thinking, guys, tomorrow I have 140 as a key psychological level. If we're able to scale above it, I'd love to see us reach that 149. Now, I don't think it's going to happen in the same day, but what we could do is we can mark out some pivot highs, pivot lows, areas that we might want to see as targets here on the daily time frame. So what we could do is we can mark out this pivot high because this is our most recent major pivot, and we're going to hold the shift button on TradingView and it's going to stretch it out. So now I have 143.44. So if we're able to open somewhere near this 140, my first target on Nvidia, if I was to day trade some calls tomorrow, would be that 143, 144. Again, also comes to key psychological levels, 140, 145, 150. Key psych levels come near areas that end in zeros, fives, and 25. So if we're looking at something that's trading very heavy, like Tesla, before it had its stock split, it was around $900. Well, we'd look for 900, 925, 950. But Nvidia, we could look by fives. I held on to my 140 calls I got Friday for Nvidia. There we go. Hopefully stress relief for those Nvidia 140 calls hold. Look at that. We're getting another push higher here on Nvidia. I'm really hoping to see some good earnings and some, well, obviously we got our earnings and the earnings per share was a miss. Revenue was a bit strong, but again, we have to be so patient and so adamant in the sense that we don't know what they're going to say on this call. The call's in 10 minutes, guys. Make sure you stick around. Hit that like button if you like what me and Paul have been discussing so far. We can take a quick look one more time at exactly what Nvidia is, what their roadmap is. Now, Hopper H100, these are the ones they can't get to China anymore. So we're going to be careful. We have to be careful. We don't have a lot of clear direction, and we want to watch the market as it comes out. And we want to watch what they say on this earnings call. Now, what we could look for on this earnings call, guys, would be, let's see, what to listen for. The outlook for data center growth, especially around enterprise AI adoption, updates on Blackwell rollout and customer reception. Now, this is something Paul was mentioning before, guys. Because they're transitioning to Blackwell, they're going to see some bumps, they're going to see some delays and some issues, and we want to be aware of this. This is hopefully something that they will discuss on the earnings call, so we have a better idea of, okay, are they moving forward with the Blackwell rollout strong? Are they delaying it and pushing it back? What's NVIDIA looking to do here? Comments on supply constraints and production scalability. Again, something we want to listen for mainly is the whole China situation where they aren't able to sell the same GPUs that they have to China. They have to create a new GPU. They have to change things up. This is going to stall and have a big hit on their revenue going forward. So going into Q2, something we want to be aware of, but we don't know on the earnings call. They might give us something huge to go off of. So make sure you guys stick around, hit that like, hit that subscribe, and don't forget to join Paul on Tuesdays at 11:30 for Tech Tune-Up. Join me on Wednesdays here for Futures Fever. I give away free Apex Trader evaluation accounts. Really great stuff, guys. Broader commentary on AI ecosystem leadership. This is another really big one, guys. We mentioned the CUDA, that's CUDA. That sort of came in 2007, and that's also what sort of paved the roadmap for NVIDIA to be a leader in AI. Because what CUDA is it gives you the web base. So what one prompt goes into 20 prompts, 20 prompts goes into 100 prompts, goes into 1,000 prompts. That's where that CUDA, CUDA, comes from. Absolutely, guys. What's going on, everybody? Hope you guys are ready for our earnings call for NVIDIA. It's going to be at 5 p.m. Eastern. We got a lot to do, guys. Got a lot of analysis to cover. We also want to see if they have any signs of gaming segment normalization. I mentioned earlier with Paul how they were very heavy on the gaming industry, but now with their GPUs being so powerful, running so many companies and AI warehouses, they really aren't leaning too heavy on gaming. But let's see if they want to flip that around, right? Earnings call is in about 6 minutes, guys, 7 minutes, and we want to know exactly what's going on. We can take a look at our stock. It's currently trading near $141 a share right now, guys. This is absurd. Some crazy price action. I know we got a lot of people. Guys, let me know. Are you guys swing trading anything on NVIDIA? Are you in calls? Are you in puts? Are you looking for a gap up here? NVIDIA with a strong gap that's going to be a nice, strong leader on something like ES and NQ, right? The whole market in its total. Absolutely, yo. It's our pleasure, guys. Make sure you hit that like button. We always want to cover the best. We always want to give you guys the best information as well. I feel like these earning coverages are great because you guys could hear their earnings call, but it's also even better because we discuss what to listen for on that call going forward. NVTS is moving up with NVIDIA. Yes, NVTS is another big one to keep an eye on. Let's pull that back up. Wow, look at that. Above 141 per share on NVIDIA, guys. What do you guys think? 145 when market opens? Let me know in the comments. 145 or are we going lower? Let's see. NVTS. NVTS moving with NVIDIA. A little bit of a move here pre-market. 5%, 6% move to the upside. If we are looking at the daily time frame, though, it's been on a wild run, right? Since this is May 22nd, this is Thursday, believe this is when people heard the announcement that NVTS was something that NVIDIA was invested in, and it gave us a gap from $1.90 all the way to $4.91, 151% move overnight in a gap. 140 calls, CRWV jumping to, that's another one that we mentioned that NVIDIA owns and holds, and we could see that pre-market too. CRWV, CoreWeave. Look at this, guys. Again, this is a Nvidia holdings, NVIDIA, and we see that it's pushing higher. It's been pushing higher since they IPO'd, and NVIDIA has been strong. Huang wants to see SPY. We're not going to be doing any SPY coverage. I do have the ES over here, but right now we're just focusing on NVIDIA because they have their earnings report and they have their earnings call in about 5 minutes. So, guys, be ready for it. Very excited to see what they have in store for us, seeing how much of a leader they are in the AI field. So here's CRWV, again, a big investment on NVIDIA. This is about, what did we say? This is 78% of NVIDIA's portfolio is in this stock. They own about 7% of this whole company through shares. So we want to be aware of CRWV. This is another one that might possibly be in for a good rally. I mean, we see the momentum here. We see it's been continuing higher. It's up over 181% if we go from its all-time lows just over here, because remember, it IPO'd in March. We're up over 240, 250% on this one stock alone. And it doesn't look like it's running into any resistance, guys. This might be an okay buy and hold if NVIDIA is able to report something strong during its earnings call. So not only NVIDIA, but CRWV could also be a strong company with NVIDIA as well. Earlier, we mentioned how important it is to be aware of the companies that our company we're invested in this case, NVIDIA, is working with and partnering with. Seeing that NVIDIA has a huge case, 78% of their market portfolio, stock portfolio, is in this company, that tells me they have an extreme amount of confidence in it. And if NVIDIA is putting that much money and that much confidence in it, I too would have some confidence with it. So guys, one quick look at NVIDIA one more time. We have that earnings call coming up in about 4 minutes, and we see we are well above that 140 level. We're hitting 141, almost 141.50. Guys, where's NVIDIA opening tomorrow? Let me know where you think. Do you think we're going to open higher, above 140? Do you think we're going to break back lower, below 140? Where's the market going? Do we want to gain this traction and momentum and gap and go tomorrow and continue higher? NVIDIA really isn't that off from its all-time highs. All-time highs only being at 153. If it opens tomorrow around 141, 145, 150 is not that out of the ordinary, not that out of the question, especially given strong guidance. But that's all going to come to us in news and with this earnings call. So it's important as traders and investors to listen to these calls, because we can't predict the market. We can't control the market. All we can do is react to the market. And what are we doing now? We're reacting by seeing how strong NVIDIA has been pushing, as well as all of the companies it's invested in. Guys, I'm wrapping up our coverage right here. Make sure you stick around because the earnings call is in about 2 minutes. Make sure you hit that like button if you like everything me and Paul had to say about NVIDIA. Let me know in the comments if you're invested in it as well. And I will see you guys later. Take care, everyone.
First one.
Yes.
Perfect, and going live in 5, 4, 3,
Good afternoon. My name is Sarah, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's first quarter fiscal 2026 financial results conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star 1 on your telephone keypad. If you would like to withdraw your question, please press star 1 again. Thank you. Toshiya Hari, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the first quarter of fiscal 2026. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I'd like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the second quarter of fiscal 2026. The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, May 28, 2025, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thank you, Toshiya. We delivered another strong quarter with revenue of $44 billion, up 69% year over year, exceeding our outlook in what proved to be a challenging operating environment. Data center revenue of $39 billion grew 73% year on year. AI workloads have transitioned strongly to inference, and AI factory buildouts are driving significant revenue. Our customers' commitments are firm. On April 9th, the U.S. government issued new export controls on H20, our data center GPU designed specifically for the China market. We sold H20 with the approval of the previous administration. Although our H20 has been in the market for over a year and does not have a market outside of China, the new export controls on H20 did not provide a grace period to allow us to sell through our inventory. In Q1, we recognized $4.6 billion in H20 revenue, which occurred prior to April 9th, but also recognized a $4.5 billion charge as we wrote down inventory and purchase obligations tied to orders we had received prior to April 9th. We were unable to ship $2.5 billion in H20 revenue in the first quarter due to the new export controls. The $4.5 billion charge was less than what we initially anticipated as we were able to reuse certain materials. We are still evaluating our limited options to supply data center compute products compliant with the U.S. government's revised export control rules. Losing access to the China AI accelerator market, which we believe will grow to nearly $50 billion, would have a material adverse impact on our business going forward and benefit our foreign competitors in China and worldwide. Our Blackwell ramp, the fastest in our company's history, drove a 73% year-on-year increase in data center revenue. Blackwell contributed nearly 70% of data center compute revenue in the quarter, with a transition from Hopper nearly complete. The introduction of GB200 NVL was a fundamental architectural change to enable data center scale workloads and to achieve the lowest cost per inference token. While these systems are complex to build, we have seen a significant improvement in manufacturing yields and rack shipments are moving to strong rates to end customers. GB200 NVL racks are now generally available for model builders, enterprises, and sovereign customers to develop and deploy AI. On average, major hyperscalers are each deploying nearly 1,000 NVL 72 racks, or 72,000 Blackwell GPUs per week, and are on track to further ramp output this quarter. Microsoft, for example, has already deployed tens of thousands of Blackwell GPUs and is expected to ramp to hundreds of thousands of GB200s with OpenAI as one of its key customers. Key learnings from the GB200 ramp will allow for a smooth transition to the next phase of our product roadmap, Blackwell Ultra. Sampling of GB300 systems began earlier this month at the major CSPs, and we expect production shipments to commerce later this quarter. GB300 will leverage the same architecture, same physical footprint, and the same electrical and mechanical specifications as GB200. The GB300 drop-in design will allow CSPs to seamlessly transition their systems and manufacturing used for GB200 while maintaining high yields. B300 GPUs with 50% more HBM will deliver another 50% increase in dense FP4 inference compute performance compared to the B200. We remain committed to our annual product cadence, with our roadmap extending through 2028, tightly aligned with the multiple year planning cycles of our customers. We are witnessing a sharp jump in inference demand. OpenAI, Microsoft, and Google are seeing a step function leap in token generation. Microsoft processed over 100 trillion tokens in Q1, a 5-fold increase on a year-over-year basis. This exponential growth in Azure OpenAI is representative of strong demand for Azure AI Foundry, as well as other AI services across Microsoft's platform. Inference-serving startups are now serving models using B200, tripling their token generation rate and corresponding revenues for high-value reasoning models such as DeepSeek R1, as reported by Artificial Analysis. Nvidia Dynamo on Blackwell NVL72 turbocharges AI inference throughput by 30x for the new reasoning models sweeping the industry. Developer engagements increased, with adoption ranging from LLM providers such as Perplexity to financial services institutions such as Capital One, who reduced agentic chatbot latency by 5x with Dynamo. In the latest MLPerf inference results, delivering up to 30x higher inference throughput compared to our 8 GPU H200 submission on the challenging Llama 3.1 benchmark. This feat was achieved through a combination of tripling the performance per GPU as well as 9x more GPUs, all connected on a single NVLink domain. And while Blackwell is still early in its life cycle, software optimizations have already improved its performance by 1.5x in the last month alone. We expect to continue improving the performance of Blackwell through its operational life, as we have done with Hopper and Ampere. For example, we increased the inference performance of Hopper by 4 times over 2 years. This is the benefit of NVIDIA's programmable CUDA architecture and rich ecosystem. The pace and scale of AI factory deployments are accelerating, with nearly 100 NVIDIA-powered AI factories in flight this quarter, a 2-fold increase year over year, with the average number of GPUs powering each factory also doubling in the same period. And more AI factory projects are starting across industries and geographies. NVIDIA's full-stack architecture is underpinning AI factory deployments as industry leaders like AT&T, BYD, Capital One, Foxconn, MediaTek, and Telenor are strategically vital sovereign clouds like those recently announced in Saudi Arabia, Taiwan, and the UAE. We have a line of sight to projects requiring tens of gigawatts of NVIDIA AI infrastructure in the not too distant future. The transition from generative to agentic AI capable of perceiving, reasoning, planning, and acting, will transform every industry, every company, and country. We envision AI agents as a new digital workforce capable of handling tasks ranging from customer service to complex decision-making processes. We introduced the Llama Nemotron family of open reasoning models designed to supercharge agentic AI platforms for enterprises. Built on the Llama architecture, these models are available as NIMs or NVIDIA inference microservices with multiple sizes to meet diverse deployment needs. Our post-training enhancements have yielded a 20% accuracy boost and a 5x increase in inference speed. Leading platform companies, including Accenture, Cadence, Deloitte, and Microsoft, are transforming work with our reasoning models. NVIDIA NeMo microservices are generally available across industries and are being leveraged by leading enterprises to build, optimize, and scale AI applications. With NeMo, Cisco increased model accuracy by 40% and improved response time by 10x in its code assistant. NASDAQ realized a 30% improvement in accuracy and response time in its AI platform's search capabilities. And Shell's custom LLM achieved a 30% increase in accuracy when trained with NVIDIA NeMo. NeMo's parallelism techniques accelerated model training time by 20% when compared to other frameworks. We also announced a partnership with Yum Brands, the world's largest restaurant company, to bring NVIDIA AI to 500 of its restaurants this year and expanding to 61,000 restaurants over time to streamline order taking, optimize operations, and enhance service across its restaurants. For AI-powered cybersecurity, leading companies like Checkpoint, CloudStrike, and Palo Alto Networks are using NVIDIA's AI security and software stack to build, optimize, and secure agentic workflows, with CloudStrike realizing 2x faster detection triage with 50% less compute cost. Moving to networking, sequential growth in networking resumed in Q1 with revenue up 64% quarter over quarter to $5 billion. Our customers continue to leverage our platform to efficiently scale up and scale out AI factory workloads. We created the world's fastest switch, NVLink. For scale up, our NVLink compute fabric in its 5th generation offers 14x the bandwidth of PCIe Gen 5. NVLink 72 carries 130 terabytes per second of bandwidth in a single rack, equivalent to the entirety of the world's peak internet traffic. NVLink is a new growth vector and is off to a great start, with Q1 shipments exceeding $1 billion. At Computex, we announced NVLink Fusion. Hyperscale customers can now build semi-custom CCUs and accelerators that connect directly to the NVIDIA platform with NVLink. We are now enabling key partners, including ASIC providers such as MediaTek, Marvell, Alchip Technologies, and Astera Labs, as well as CPU suppliers such as Fujitsu and Qualcomm, to leverage NVLink Fusion to connect our respective ecosystems. For scale out, our enhanced Ethernet offerings deliver the highest throughput, lowest latency networking for AI. Spectrum X posted strong sequential and year-on-year growth and is now annualizing over $8 billion in revenue. Adoption is widespread across major CSPs and consumer internet companies, including CoreWeave, Microsoft Azure, Oracle Cloud, and xAI. This quarter, we added Google Cloud and Meta to the growing list of Spectrum-X customers. We introduced Spectrum-X and Quantum-X silicon photonics switches featuring the world's most advanced co-packaged optics. These platforms will enable next-level AI factory scaling to millions of GPUs through the increasingly power efficiency by 3.5x and network resiliency by 10x, while accelerating customer time to market by 1.3x. Transitioning to a quick summary of our revenue by geography. China, as a percentage of our data center revenue, was slightly below our expectations and down sequentially due to H20 export licensing controls. For Q2, we expect a meaningful decrease in China data center revenue. As a reminder, while Singapore represented nearly 20% of our Q1 build revenue, as many of our large customers use Singapore for centralized invoicing, our products are almost always shipped elsewhere. Note that over 99% of H100, H200, and Blackwell data center compute revenue billed to Singapore was for orders from US-based customers. Moving to gaming and AI PCs. Gaming revenue was a record $3.8 billion, increasing 48% sequentially and 42% year on year. Strong adoption by gamers, creatives, and AI enthusiasts have made Blackwell our fastest ramp ever. Against a backdrop of robust demand, we greatly improved our supply and availability in Q1 and expect to continue these efforts in Q2. AI is transforming PC and creator and gamers. With a 100 million user installed base, GeForce represents the largest footprint for PC developers. This quarter, we added to our AI PC laptop offerings, including models capable of running Microsoft's Copilot+. This past quarter, we brought Blackwell architecture to mainstream gaming with its launch of GeForce RTX 5060 and 5060 Ti, starting at just $299. The RTX 5060 also debuted in laptops starting at $1,099. These systems that double the frame rate and slash latency. These GeForce RTX 5060 and 5060 Ti desktop GPUs and laptops are now available. In console gaming, the recently unveiled Nintendo Switch 2 leverages Nvidia's neural rendering and AI technologies, including next-generation custom RTX GPUs with DLSS technology, to deliver a giant leap in gaming performance to millions of players worldwide. Nintendo has shipped over 150 million Switch consoles to date, making it one of the most successful gaming systems in history. Moving to Pro Visualization. Revenue of $509 million was flat sequentially and up 19% year on year. Tariff-related uncertainty temporarily impacted Q1 systems, and demand for our AI workstations is strong, and we expect sequential revenue growth to resume in Q2. NVIDIA DGX Spark and Station revolutionized personal computing by putting the power of an AI supercomputer in a desktop form factor. DGX Spark delivers up to 1 petaflop of AI compute, while DGX Station offers an incredible 20 petaflops and is powered by the GB300 superchip. DGX Spark will be available in calendar Q3 and DGX Station later this year. We have deepened Omniverse's integration and adoption into some of the world's leading software platforms, including Databricks, SAP, and Schneider Electric. New Omniverse blueprints, such as Mega for at-scale robotic fleet management, are being leveraged in Kion Group, Pegatron, Accenture, and other leading companies to enhance industrial operations. At Computex, we showcased Omniverse's great traction with technology manufacturing leaders, including TSMC, Quanta, Foxconn, Pegatron. Using Omniverse, TSMC saves months in work by designing fabs virtually. Foxconn accelerates thermal simulations by 150x, and Pegatron reduced assembly line defects rates by 67%. Lastly, with our automotive group, revenue was $567 million, down 1% sequentially, but up 72% year on year. Year on year growth was driven by the ramp of self-driving across a number of customers and robust end demand for NEVs. We are partnering with GM to build the next gen vehicles, factories, and robots using NVIDIA AI, simulation, and accelerated computing. And we are now in production with our full stack solution for Mercedes-Benz, starting with the new CLA, hitting roads in the next few months. We announced Isaac, Groot, and One, the world's first open, fully customizable foundation model for humanoid robots, enabling generalized reasoning and skill development. We also launched new open NVIDIA Cosmo World Foundation models. Leading companies include 1X, Agility Robotics, Figure AI, Uber, and Wabi. We've begun integrating Cosmos into their operations for synthetic data generation, while Agility Robotics, Boston Dynamics, and XPen Robotics are harnessing Isaac simulation to advance their humanoid efforts. GE Healthcare is using the new NVIDIA Isaac platform for healthcare simulation, built on NVIDIA Omniverse and using NVIDIA Cosmos. The platform speeds development of robotic imaging and surgery systems. The era of robotics is here. Billions of robots, hundreds of millions of autonomous vehicles, and hundreds of thousands of robotic factories and warehouses will be developed. All right, moving to the rest of the P&L. GAAP gross margins and non-GAAP gross margins were 60.5% and 61% respectively. Excluding the $4.5 billion charge, Q1 non-GAAP gross margins would have been 71.3%, slightly above our outlook at the beginning of the quarter. Sequentially, GAAP operating expenses were up 7% and non-GAAP operating expenses were up 6%, reflecting higher compensation and employee growth. Our investments include expanding our infrastructure capabilities and AI solutions, and we plan to grow these investments throughout the fiscal year. In Q1, we returned a record $14.3 billion to shareholders in the form of share repurchases and cash dividends. Our capital return program continues to be a key element of our capital allocation strategy. Let me turn to the outlook for the second quarter. Total revenue is expected to be $45 billion, plus or minus 2%. We expect modest sequential growth across all of our platforms. In data center, we anticipate the continued ramp of Blackwell to be partially offset by a decline in China revenue. Note, our outlook reflects a loss in H20 revenue of approximately $8 billion for the second quarter. GAAP and non-GAAP gross margins are expected to be 71.8% and 72% respectively, plus or minus 50 basis points. We expect better Blackwell profitability to drive modest sequential improvement in gross margins. We are continuing to work towards achieving gross margins in the mid-70s range late this year. GAAP and non-GAAP operating expenses are expected to be approximately $5.7 billion and $4 billion, respectively, and we continue to expect full year fiscal year 26 operating expense growth to be in the mid-30% range. GAAP and non-GAAP other income and expenses are expected to be an income of approximately $450 million, excluding gains and losses from non-marketable and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 16.5%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website, including a new financially information AI agent. Let me highlight upcoming events for the financial community. We will be at the BofA Global Technology Conference in San Francisco on June 4th, the Rosenblatt Virtual AI Summit and NASDAQ Investor Conference in London on June 10th, and GTC Paris at VivaTech on June 11th in Paris. We look forward to seeing you at these events. Our earnings call to discuss the results of our second quarter of fiscal 2026 is scheduled for August 27. Well, now let me turn it over to Jensen to make some remarks.
Thanks, Colette. We've had a busy and productive year. Let me share my perspective on some topics we're frequently asked. On export control, China is one of the world's largest AI markets and a springboard to global success. With half of the world's AI researchers based there, the platform that wins China is positioned to lead globally. Today, however, the $50 billion China market is effectively closed to US industry. The H20 export ban ended our Hopper data center business in China. We cannot reduce Hopper further to comply. As a result, we are taking a multi-billion-dollar write-off on inventory that cannot be sold or repurposed. We are exploring limited ways to compete, but Hopper is no longer an option. China's AI moves on with or without US chips. It has the compute to train and deploy advanced models. The question is not whether China will have AI. It already does. The question is whether one of the world's largest AI markets will run on American platforms. Shielding Chinese chip makers from US competition only strengthens them abroad and weakens America's position. Export restrictions have spurred China's innovation and scale. The AI race is not just about chips. It's about which stack the world runs on. As that stack grows to include 6G and quantum, US global infrastructure leadership is at stake. The US has based its policy on the assumption that China cannot make AI chips. That assumption was always questionable, and now it's clearly wrong. China has enormous manufacturing capability. In the end, the platform that wins the AI developers wins AI. Export controls should strengthen US platforms, not drive half of the world's AI talent to rivals. On DeepSeek and Huang from China are among the best open source AI models. Released freely, they've gained traction across the US, Europe, and beyond. DeepSeek R1, like ChatGPT, introduced reasoning AI that produces better answers the longer it thinks. Reasoning AI enables step-by-step problem solving, planning, and tool use, turning models into intelligent agents. Reasoning is compute intensive, requires hundreds to thousands of times more tokens per task than previous one-shot inference. Reasoning models are driving a step function surge in inference demand. AI scaling laws remain firmly intact, not only for training, but now inference too requires massive scale compute. DeepSeek also underscores the strategic value of open source AI. When popular models are trained and optimized on US platforms, it drives usage, feedback, and continuous improvement, reinforcing American leadership across the stack. US platforms must remain the preferred platform for open source AI. That means supporting collaboration with top developers globally, including in China. America wins when models like DeepSeek and Huang runs best on American infrastructure. Regarding onshore manufacturing, President Trump has outlined a bold vision to reshore advanced manufacturing, create jobs, and strengthen national security. Future plants will be highly computerized and robotics. We share this vision. TSMC is building 6 fabs and 2 advanced packaging plants in Arizona to make chips for Nvidia. Process qualification is underway, with volume production expected by year-end. SPIL and Amkor are also investing in Arizona. constructing packaging, assembly, and test facilities. In Houston, we're partnering with Foxconn to construct a 1 million square foot factory to build AI supercomputers. Wistron is building a similar plant in Fort Worth, Texas. To encourage and support these investments, we've made substantial long-term purchase commitments, a deep investment in America's AI manufacturing future. Our goal, from chip to supercomputer, built in America within a year. Each GB200 NVLink 72 racks contains 1.2 million components and weighs nearly 2 tons. No one has produced supercomputers on this scale. Our partners are doing an extraordinary job. On AI diffusion rule, President Trump rescinded the AI diffusion rule, calling it counterproductive, and proposed a new policy to promote US AI tech with trusted partners. On his Middle East tour, he announced historic investments. I was honored to join him in announcing a 500 megawatt AI infrastructure project in Saudi Arabia and a 5 gigawatt AI campus in the UAE. President Trump wants US tech to lead. The deals he announced are wins for America, creating jobs, advancing infrastructure, generating tax revenue, and reducing the US trade deficit. The US will always be NVIDIA's largest market and home to the largest installed base of our infrastructure. Every nation now sees AI as core to the next industrial revolution, a new industry that produces intelligence and essential infrastructure for every economy. Countries are racing to build national AI platforms to elevate their digital capabilities. At Computex, we announced Taiwan's first AI factory in partnership with Foxconn and the Taiwan government. Last week, I was in Sweden to launch its first national AI infrastructure. Japan, Korea, India, Canada, France, the UK, Germany, Italy, Spain, and more are now building national AI factories to empower startups, industries, and societies. Sovereign AI is a new growth engine for NVIDIA. Toshiya, back to you. Thank you.
Operator, we will now open the call for questions. Would you please poll for questions?
Thank you. At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. You guys have talked about this scaling up of inference around reasoning models for at least a year now, and we've really seen that come to fruition as you talked about. We've heard it from your customers. Can you give us a sense for how much of that demand you're able to serve, and give us a sense for maybe how big the inference business is for you guys, and do we need full on NVL72 rack scale solutions for reasoning inference going forward?
Well, we would like to serve all of it. And I think we're on track to serve most of it. Grace Blackwell NVLink 72 is the ideal engine today, the ideal computer thinking machine, if you will, for reasoning AI. There's a couple of reasons for that. The first reason is that the token generation amount, the number of tokens reasoning goes through, is 100, 1,000 times more than a one-shot chatbot. It's essentially thinking to itself, breaking down a problem step by step. It might be planning multiple paths to an answer. It could be using tools, reading PDFs, reading web pages, watching videos, and then producing a result, an answer. The longer it thinks, the better the answer, the smarter the answer is. And so what we would like to do And the reason why Grace Blackwell was designed to give such a giant step up in inference performance is so that you could do all this and still get a response as quickly as possible. Compared to Hopper, Grace Blackwell is some 40 times higher speed and throughput compared. And so this is going to be a huge, huge benefit in driving down the cost while improving the quality of response with excellent quality of service at the same time. So that's the fundamental reason. That was the core driving reason for Grace Blackwell NVLink 72. Of course, in order to do that, we had to reinvent, literally redesign the entire way that these supercomputers are built. But now we're in full production. It's going to be exciting. It's going to be incredibly exciting.
The next question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for the question. Just a clarification for Colette first. So on the China impact, I think previously it was mentioned at about $15 billion. So you had the $8 billion in Q2. So is there still some left as a headwind for the remaining quarters? Just Colette, how to model that. And then question, Jensen, for you. Back at GTC, you had outlined a path towards almost $1 trillion of AI spending over the next few years. Where are we in that build out? And do you think it's going to be uniform, that you will see every spender, whether it's CSP, sovereigns, enterprises, or build out? Should we expect some periods of digestion in between? Just what are your customer discussions telling you about how to model growth for next year?
Yes, Vivek, thanks so much for the question regarding H20. Yes, we recognized 4.6 H20 in Q1. We were unable to ship 2.5 billion, so the total for Q1 should have been 7 billion. When we look at our Q2 is going to be meaningfully down in terms of China data center revenue. And we had highlighted in terms of the amount of orders that we had planned for H20 in Q2, and that was 8 billion. Now going forward, we did have other orders going forward that we will not be able to fulfill. That is what was incorporated, therefore, in the amount that we wrote down of the $4.5 billion. That write down was about inventory and purchase commitments, and our purchase commitments were about what we expected regarding the orders that we had received. Going forward, though, it's a bigger issue regarding the amount of the market that we will not be able to serve. We assess that TAM to be close to about 50 billion in the future, as we don't have a product to enable for the China.
Vivek, the probably the best way to think through it is that AI is several things. Of course, we know that AI is this incredible technology that's going to transform every industry. From, of course, the way we do software to healthcare and financial services to, retail to I guess every industry, transportation, manufacturing, and we're at the beginning of that. But maybe another way to think about that is where do we need intelligence? Where do we need digital intelligence? And it's in every country, it's in every industry. And we now, because of that, we recognize that AI is also an infrastructure. It's a way of delivering a technology that requires factories. And these factories produce tokens. And they, as I mentioned, are important to every single industry in every single country. And so on that basis, we're really at the very beginning of it, because the adoption of this technology is really kind of in its early stages. Now, we've reached an extraordinary milestone with AIs that our reasoning, our thinking, what people call inference time scaling. Of course, it created a whole new, we've entered an era where inference is going to be a significant part of the compute workload. But anyhow, it's going to be a new infrastructure, and we're building it out in the clouds. The United States is really the early starter, and available in U.S. clouds, and this is our largest market, our largest installed base, and we're going to continue to see that happening. But beyond that, we're going to see AI go into enterprise, which is on-prem, because so much of the data is still on-prem. Access control is really important. It's really hard to move every company's data into the cloud, and so we're going to move AI into the enterprise. And you saw that we announced a couple of really exciting new products. Our RTX Pro enterprise AI server that runs everything enterprise and AI. Our DGX Spark and DGX Station, which is designed for developers who want to work on-prem. And so enterprise AI is just taking off. Telcos. Today, a lot of the telco infrastructure will be in the future software defined and built on AI. And so 6G is going to be built on AI. And that infrastructure needs to be built out. And it's very, very early stages. And then, of course, every factory today that makes things will have an AI factory that sits with it. And the AI factory is going to be creating AI and operating AI for the factory itself, but also to power the products and the things that are made by the factory. So it's very clear that every car company will have AI factories, and very soon there'll be robotics companies, robot companies, and those companies will be also building AIs to drive the robots. And so we're at the beginning of all of this build out.
The next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. There have been many large GPU cluster investment announcements in the last month, and you alluded to, a few of them with Saudi Arabia, the UAE, and then also, we heard from Oracle and xAI, just to name a few. So my question, are there other that have yet to be announced of the same kind of scale and magnitude? And perhaps more importantly, how are these orders impacting your lead times for Blackwell and your current visibility sitting here today, almost halfway through 2025?
Well, we have more orders today than we did at the last time I spoke about orders at GTC. However, we're also increasing our supply chain and building out our supply chain. They're doing a fantastic job. We're building it here on shore in the United States, but we're going to keep our supply chain quite busy for many more years coming. And with respect to further announcements, I'm going to be on the road next week through Europe, and it's just about every country needs to build out AI infrastructure, and there umpteen AI factories being planned. I think in the remarks, Colette mentioned there's some 100 AI factories being built. There's a whole bunch that haven't been announced. And I think the important concept here, which makes it easier to understand, is that like other technologies that impact literally every single industry, of course, electricity was one, and it became infrastructure. Of course, the information infrastructure, which we now know as the internet, affects every single industry, every country, every society. Intelligence is surely one of those things. I don't know any company, industry, country who thinks that intelligence is optional. It's essential infrastructure. And so we've now digitalized intelligence. And so I think we're clearly in the beginning of the build out of this infrastructure. And every country will have it. I'm certain of that. Every industry will use it. That I'm certain of. And what's unique about this infrastructure is that it needs factories. It's a little bit like the energy infrastructure, electricity. It needs factories. We need factories to produce this intelligence, and the intelligence is getting more sophisticated. We were talking about earlier that we had a huge breakthrough in the last couple of years with reasoning AI, and now there are agents that reason, and there's super agents that use a whole bunch of tools, and then there's clusters of super agents where agents are working with agents, solving problems. And so you could just imagine, compared to one-shot chatbots and the agents that are now using AI built on these large language models, how much more compute intensive they really need to be and are. And so I think we're in the beginning of the build out, and there should be many more announcements in the future.
Your next question comes from Ben Reitzes with Melius. Your line is open.
Yeah, hi. Thanks for the question. I wanted to ask, first to Colette, just a little clarification around the guidance and maybe putting it in a different way. The 8 billion for H20 just seems like, it's roughly 3 billion more than most people thought with regard to what you'd be foregoing in the second quarter. So that would mean that, with regard to your guidance, the rest of the business, in order to hit 45 is doing 2 to 3 billion or so better. So, I was wondering if that math made sense to you, and then, in terms of the guidance, that would imply the non-China business is doing, a bit better than the street expected. So, wondering, what the primary driver was there in your view. And then this second part of my question, Jensen, I know you guide one quarter at a time, but with regard to the AI diffusion rule being lifted and this momentum with sovereign, there's been times in your history where you guys have said on calls like this where you have more conviction in sequential growth throughout the year, et cetera. And given the unleashing of demand with AI diffusion being revoked and the supply chain increasing, does the environment give you more conviction in sequential growth as we go throughout the year? So first one for Colette, and then next one for Jensen. Thanks so much.
Thanks, Ben, for the question. When we look at our Q2 guidance and our commentary that we provided, that had the export controls not occurred, we would have had orders of about 8 billion for H20. That's correct. That was a possibility for what we would have had in our outlook for this quarter in Q2. So what we also have talked about here is the growth that we've seen in Blackwell across many of our customers, as well as the growth that we continue to have in terms of supply that we need for our customers. So putting those together, that's where we came through with the guidance that we provided. I'm going to turn the rest over to Jensen to see how he wants to.
Thanks. Thanks, Ben. I would say compared to the beginning of the year, compared to GTC timeframe, there are 4 positive surprises. The first positive surprise is the step function demand increase of reasoning AI. I think it is fairly clear now that AI is going through an exponential growth, and reasoning AI really busted through. Concerns about hallucination or its ability to really solve problems, and I think a lot of people are crossing that barrier and realizing how incredibly effective agentic AI is and reasoning AI is. So number one is inference reasoning, and the exponential growth there, demand growth. The second one, you mentioned AI diffusion. It's really terrific to see that the AI diffusion rule was rescinded. President Trump wants America to win, and he also realizes that we're not the only country in the race, and he wants United States to win, and recognizes that we have to get the American stack out to the world and have the world build on top of American stacks instead of alternatives. And so AI diffusion happened. The rescinding of it happened at almost precisely the time that countries around the world are awakening the importance of AI as an infrastructure, not just as a technology of great curiosity and great importance, but infrastructure for their industries and startups and society. Just as they had to build out infrastructure for electricity and internet, you got to build out an infrastructure for AI. I think that's an awakening, and that creates a lot of opportunity. The third is enterprise AI. Agents work, and these agents are really quite successful. Much more than generative AI, agentic AI is game changing. Agents can understand ambiguous and rather implicit instructions, and able to problem solve and use tools and have memory and so on. And so I think this is enterprise AI is ready to take off, and it's taken us a few years to build a computing system that is able to integrate, run enterprise AI stacks, run enterprise IT stacks, but add AI to it. And this is the RTX Pro Enterprise server that we announced at Computex just last week. And just about every major IT company has joined us, and I'm super excited about that. And so computing is one part of it, but remember, enterprise IT is really three pillars. It's compute, storage, and networking. And we've now put all three of them together finally, and we're going to market with that. And then lastly, industrial AI. Remember, one of the implications of the world reordering, if you will, is regions onshoring manufacturing and building plants everywhere. In addition to AI factories, of course, there are new electronics manufacturing, chip manufacturing, being built around the world. And all of these new plants and these new factories are creating exactly the right time when Omniverse and AI and all the work that we're doing with robotics is emerging. And so this fourth pillar is quite important. Every factory will have an AI factory associated with it, and in order to create these physical AI systems, you really have to train a vast amount of data. So back to more data, more training, more AIs to be created, more computers. And so these four drivers are really kicking into turbocharge.
Your next question comes from Timothy Arcuri with UBS. Your line is open.
Thanks a lot. Jensen, I wanted to ask about China. It sounds like the July guidance assumes there's no SKU replacement for the H20, but if the president wants the U.S. to win, it seems like you're going to have to be allowed to ship something into China. So I guess I had two points on that. First of all, have you been approved to ship a new modified version into China, and you're currently building it, but you just can't ship it in fiscal Q2? And then you were sort of run rating $7 to $8 billion a quarter into China. Can we get back to those sorts of quarterly run rates once you get something that you're allowed to ship back into China? I think we're all trying to figure out how much to add back to our models and when. So whatever you can say there would be great. Thanks.
the president has a plan. He has a vision, and I trust him. With respect to our export controls, it's a set of limits, and the new set of limits pretty much make it impossible for us to reduce Hopper any further, for any productive use, and so the new limits, it's kind of the end of the road for Hopper. We have limited options, and so the key is to understand the limits. The key is to understand the limits and see if we can come up with interesting products that could continue to serve the Chinese market. We don't have anything at the moment, but we're considering it. We're thinking about it. Obviously, the limits are quite stringent at the moment, and we have nothing to announce today. And when the time comes, we'll engage the administration and discuss that.
Your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Hi, this is Jake on for Aaron. Thanks for taking the question and congrats on the great quarter. I was wondering if you could give some additional color around the strength you saw within the networking business, particularly around the adoption of your Ethernet solutions at CSPs, as well as any change you're seeing in network attach rates.
Yeah, thank you for that. We now have 3 networking platforms, maybe 4. The first one is the scale up platform, to turn a computer into a much larger computer. Scaling up is incredibly hard to do. Scaling out is easier to do, but scaling up is hard to do. And that platform is called NVLink. And NVLink comes with it chips and switches and NVLink spines, and it's really complicated. But anyways, that's our new platform, scale up platform. In addition to InfiniBand, we also have Spectrum-X. We've been fairly consistent that Ethernet was designed for a lot of traffic that are independent. But in the case of AI, you have a lot of computers working together. And the traffic of AI is insanely bursty. Latency matters a lot because the AI is thinking and it wants to get work done as quickly as possible. And you got a whole bunch of nodes working together. And so we enhanced Ethernet, added capabilities like extremely low latency, congestion control, adaptive routing, the type of technologies that were available only in InfiniBand to Ethernet. And as a result, we improved the utilization of Ethernet in these clusters. These clusters are gigantic, from as low as 50% to as high as 85%, 90%. And so the difference is, if you had a cluster that's $10 billion and you improved its effectiveness by 40%, that's worth $4 billion. It's incredible. And so Spectrum-X has been really, quite frankly, a home run. And this last quarter, as we said in the prepared remarks, we added 2 very significant CSPs to the Spectrum-X adoption. And then the last one is Bluefield, which is our control plane. And so in those 4, the control plane of the network, which is used for storage, is used for security, and for many of these clusters that want to achieve isolation among its users, multi-tenant clusters, and still be able to use and have extremely high performance, bare metal performance. Bluefield is ideal for that and is used in a lot of these cases. And so we have these four networking platforms. They're all growing, and we're doing really well. I'm very proud of the team.
Jensen, over to you.
That is all the time we have for questions. Jensen, I will turn the call back to you.
Thank you. This is the start of a powerful new wave of growth. Grace Blackwell is in full production. We're off to the races. We now have multiple significant growth engines. Inference, once the lighter workload, is surging with revenue-generating AI services. AI is growing faster and will be larger than any platform shifts before, including the internet, mobile, and cloud. Blackwell is built to power the full AI lifecycle, from training frontier models to running complex inference and reasoning agents at scale. Training demands continues to rise with breakthroughs in post-training and like reinforcement learning and synthetic data generation. But inference is exploding. Reasoning AI agents require orders of magnitude more compute. The foundations of our next growth platforms are in place and ready to scale. Sovereign AI, nations are investing in AI infrastructure like they once did for electricity and internet. Enterprise AI must be deployable on-prem and integrated with existing IT. Our RTX Pro, DGX Spark, and DGX Station enterprise AI systems are ready to modernize the $500 billion IT infrastructure on-prem or in the cloud. Every major IT provider is partnering with us. Industrial AI, from training to digital twin simulation to deployment, NVIDIA Omniverse and Isaac GR00T are powering next-generation factories and humanoid robotic systems worldwide. The age of AI is here. From AI infrastructures, inference at scale, sovereign AI, enterprise AI, and industrial AI. NVIDIA is ready. Join us at GTC Paris. I'll keynote at VivaTech on June 11th, talking about quantum GPU computing, robotic factories and robots, and celebrate our partnerships building AI factories across the region. The NVIDIA band will tour France, the UK, Germany, and Belgium. Thank you for joining us at the earnings call today. See you in Paris.
This concludes today's conference call. You may now disconnect.